In your opinion, what are the top three drivers of volatility, both at home in India and abroad?
Volatility is essentially psychological behavior of participant reacting to events.
How does an Indian investor protect their dollarized returns?
So destiny of rupee is to depreciate.
In times when central banks are buying gold and gold is limited in quantity, where does gold go from here?
So we think gold is the legitimate front running of central banks around the world.
So first of all, sir, welcome to Udan, LBS India Conclave 2026. Thank you so much for taking the time. There are few themes that I would like to touch upon today. We'll start with volatility, that is in our topic as well. Um, we've seen the post-COVID era going through a lot of market shocks. We've seen rates rising, rates falling, both in US, in India. We've seen geopolitical tensions, um, wars in Russia, Ukraine, most recently US, Iran. And for India, we are a net importer of energy, so oil price rising, right? So, in your opinion, what are the top three drivers of volatility, both at home in India and abroad in the Western world?
Hi, good afternoon, everyone. Pleasure to be here. Volatility is essentially psychological behavior of participant reacting to events. You said Russia Ukraine war, US Iran war, blah, blah, blah. But there is a buyer and there is a seller. That is why there is volatility. The seller thinks he is making money by getting away, and buyer thinks he'll make money by investing into. So volatility is nothing but psychological behavior of people reacting to events. Some people see opportunity, some people see problem.
Thank you, sir. Are there any underlying common drivers which drive volatility, maybe in like India or abroad? Like, are there any common things that are impacting vol both in India and abroad?
See, essentially we are part of the globe. We are no longer disconnected with the rest of the world. So whatever happens in any part of the world will have some consequences. And global as well as local event will continue to impact people's perception. Do they impact fundamentals? Answer is yes, but not in the manner in which prices are reacting. Value doesn't move with the events. It's the price which is moving with the events. So yes, volatility will be there. People will continue to react. There are investors, there are speculators, there are arbitrages, there are hedgers. Their sangam keeps on creating price movement, which we call volatility.
Thank you. Post 2008, we had this era of like quantitative easing in the Western world, central banks ballooning their balance sheet, if you will, right? We saw this period of lower for longer in the rates environment. Now we are in a period where rates are slightly higher in the Western world. Do you think we are entering a world where rates will be higher for longer? Are the this current environment of high rates, is that a structural change, or do you think it's a transient in nature and it will go away anytime soon?
See, interest rates always will be cyclical. They'll go up, they'll come down. When you raise it beyond a reasonable limit, it will eventually kill demand and bring down inflation, which will create the room for rates to come down. So interest rates will be cyclical. Now, will Japan go back to zero interest rate? Not in the near future or medium term, but long term, yes. A country whose population is dwindling down, the demand is going to come down. If demand keeps on coming down, interest rates will come down eventually. Bank opposite is US. They have now $39 trillion of debt. Din duni raat choguni, that kahawat was made for American debt. They are paying maybe about 1.4, $1.5 trillion by way of interest. It's almost as good as what Donald Trump wants for the defense budget, whether defense budget comes or not, but interest rates will keep on going up. So for US, the behavior will be different. It will be driven by how much cost market can absorb, how much cost government can absorb. And maybe US will engineer, quote unquote, engineer lower interest rates by what Japan did. Most of you know Japan has 250% debt to GDP ratio, but very few people know that 125% of that is owned by the Bank of Japan. So government of Japan pays interest and receives half of that by way of dividend from Bank of Japan. The US भी ऐसा ही चक्कर चला लेगा. They are much smarter than Japanese.
Okay. Thank you, sir. Um, from volatility being so prevalent, how do we find value in this kind of environment? And I'll quote a Morgan Stanley report that came out a few years ago. They called India a once in a generation opportunity. And the title was Why This Is the India's Decade. Um, According to you, what are two, three structural drivers driving value creation in companies in India? And w- what is driving your highest conviction over the next decade?
So one, whenever Wall Street firm pushes a narrative, you need to be careful. Once upon a time, Goldman talked about $200 of oil. आज तक वो भाव नहीं दिखा है. Then they coined BRICS, and you have seen what happened to
Yes.
BRICS. The US market outperformed all the BRICS nations put together. So don't go by the narrative, go by the fact. Price is what you pay, value is what you get. More importantly, for India, whatever one says, opposite is also true. And nothing illustrates better than Bandra Kurla complex. If you open this curtain, most likely you will see Dharavi, Asia's largest slum, world's largest slum. When you hear report India is a once in a generation opportunity, open the window, see Dharavi and come back to the ground. There are days when there will people who come and say India is in trouble, oil prices will kill you, blah, blah, blah. Open the other side of the window, you will see Geo Center, where world's most expensive wedding had happened. जमीन पे रहने का, हवा में नहीं उड़ने का. Three things will differentiate India growth story. One, entrepreneurship, talent. 50s, 60s, 70s, 80s, 90s, we kept on losing talent abroad, which is why Sundar Pichai, Satya Nadella, Arvind Krishnan, they all run global companies. Imagine if they had stayed back in India. Maybe we would not have created Google and Microsoft, but 1/10 of that. Now, talent like yours is coming back. You are coming back, right?
Yeah.
India will benefit out of your talent, undoubtedly. Have you heard name of Elon Musk? Who said no? You didn't hear. But none of you raised your hand, but your smile does tell that you know about him. He is the greatest entrepreneur, richest person, brilliant guy. How many of you have heard about Srinath? Not Javagal Srinath, Srinath Ravichandran. A Tambrem did his engineering, worked in MNC company, started selling electrical products, got bored, went to Wall Street, went to US, did his MBA, worked in Wall Street, like your quantitative fixed income portfolio management, made money, got bored, came back to India in 2017 to set up a aerospace venture. Entire sector was reserved for government ISRO. Fast forward 10 days, Agnikul Cosmos prints world's largest 3D printed rocket engine. He's able to print that engine in 3 days. His rockets fire on एविएशन टर्बाइन फ्यूल. यहाँ से रॉकेट लॉन्च करना है तो वो सहार एयरपोर्ट पे जाके फ्यूल लेके आएगा और यहाँ से रॉकेट लॉन्च होगा. ही इज रनिंग और ही विल रन उबेर कंपनी ऑफ रॉकेट. You give the order, and in 20 days, he'll launch satellites in lower Earth orbit, LEO orbit. He's today doing it at $10,000 per ton, which is lower than what SpaceX does with their massive rocket and massive infrastructure, almost half the price. SpaceX is able to do that because they have ability to catch the booster and the fuel tank. Many of you would have seen the video of SpaceX catching. He'll make that attempt in next 6 months. He can fail, he can succeed. If he succeeds, cost will come down to $4,000 per ton, one-fifth of SpaceX. This is the kind of talent which is coming back to India and doing what anyone would have thought impossible. But they are making it damn possible. This talent gives us confidence that दुनिया इधर की उधर हो जाए बट अपनी गाड़ी चलती रहेगी. Talent requires infrastructure. There was a time when going from Mumbai to Pune was overnight journey. And घाट में अगर बस रुक गई तो भगवान को प्रार्थना करते थे कि भगवान पूना तक पहुंचा देना. Today, if I want to go for a lunch to Pune, I'll be able to catch the lunch meeting. Of course, today also I pray when I'm driving with my wife. She is a driver, I don't know driving. So when she drives, I still pray to the God. But I can catch the luncheon meeting. This is the infrastructure. Right now, there are worries on crude import. India has electrified its railway network. Today, we run lower number of diesel train than America. Even if we don't get one drop of diesel, our train network will continue to run because more than 95% is electricity. That infrastructure gives us confidence that India growth story will continue. And finally, talent and infrastructure requires capital. Many of our generation didn't become entrepreneur because their parents didn't have money and their surname was not Tata, Birla, Ambani. But today, if you have business idea, there are providers of capital. This Triveni Sangam of talent, capital, and infrastructure gives us confidence that our story will continue. There will be ups and downs, undoubtedly. Markets will react to those even more. But will India move towards Viksit Bharat? Sooner or later, it will happen.
Do you think the exodus of talent will curb and like we'll have talent coming back?
So many years ago, I had asked this question, like you had asked me to Mr. R. Chidambaram. He said, Nilesh, this is overflow of talent. Don't worry, we have enough talent.
Um, I want to touch upon domestic flows in India. We are seeing a lot of retailers coming into the market with this SIP kind of systematic investing approach. They put some rupees aside every month from their income and invest into mutual funds. We also, at the same time, hear daily headlines about FIIs selling. Someone one on a particular day, 6,000 crores were sold, 5,000 crores were sold. Do you think the domestic flows that we have, retailers plus domestic institutions combined, have enough cushion to sustain like this FII selling trend that we have been seeing?
So, one, DII and FII make money the same way. We are not on the opposite side. If prices go up, they make money, I make money. If prices go down, I lose money, they lose money. So, please Don't equate DII versus FII. We are on the same boat. If it sinks, we'll sink together. Now, there was a time when our markets will fluctuate based on what FIIs used to do because they were dominant and their behavior was impacting prices. Today, thanks to domestic institutional investors, the impact has reduced. But do remember that we are all in the same boat. Now, combined ownership of FPI and listed equity is about $850 billion. If they come to sell even 10% of that, undoubtedly our markets will correct. If they come to sell about 1% of that, undoubtedly we'll be able to absorb. But their objective and our objective is the same. We all want to make money.
But can they actually sell 10% of their holdings?
मैं
RBI, sorry, please.
मैं 100% ले लूंगा अगर 90% नीचे बेच देंगे तो मेरे को और किसी की जरूरत नहीं मेरा अकेले का म्यूचुअल फंड ले लेगा
Right.
बट डू यू थिंक दे आर इडियट्स टू सेल एट दैट प्राइस दे विल से एट दैट प्राइस नीलेश भाई हम आपको खरीद लेंगे सो एवरीथिंग इज एट अ प्राइस एंड दे आर ऑल smart intelligent people they will play as per their requirement will play as per our requirement but please remember that we are all on the same boat.
Right. Moving on to my next theme, shiny topic, if you will, these days, gold and silver. Right. So in the past few months, we've seen gold prices rising, silver prices rising. We've seen washouts in the market in January, silver prices crashing 30% in one day, gold following 10% in one day. Um, what is the future of gold and silver? You have been very vocal about you being a gold bull for the past few years, and I think you have some significant portfolio allocation in your own fund as well. In times when central banks are buying gold and gold is limited in quantity, where does gold go from here?
So we think gold is the legitimate front running of central banks around the world. We became bullish gold in 2020 because gold was trading below the incremental cost of mining gold. No miner is stupid enough to mine gold at a price, at a cost which is lower than the market price. And we thought supply will dwindle, demand will continue, and gold prices should deliver good return. We had no idea then that gold will one day touch $5,000. Come 2022, Russia had $650 billion on the day of invasion of Ukraine. By end of day, it became $150 billion because about $500 billion was seized. They had kept zero money in US. They had kept $250 billion in Belgium, $250 billion in other European nations. In their dream, they would not have imagined a tiny nation like Belgium would freeze our money. But that was a wake-up call. जो जेब में है वो पैसा आपका है, बाहर है वो अमेरिका का है. We thought now every central banker will diversify. And look at the central banks of US, Netherlands, France, Germany. They all have more than two-thirds of gold, two-thirds of reserves in gold. Eastern side, Japan, China, India, less than 10%. So there was no price for guessing that we will start doing what Western world is doing rather than listening to what they're telling us. Post 2022, about 3,000 tons of gold has been bought by central banks. No new gold mine has come on stream for last 2 years. Existing gold mines have gone deep enough and it's probably not economical enough to produce. So as long as central banks buy gold, gold prices will continue to rise. The only worry is that one of the Wall Street firms talked about $9,000 of gold. तो वो नहीं होगा. But other than that, gold prices should continue to rise. If central banks buy gold, buy gold. If they sell gold, sell gold. If they don't do anything, then don't do anything. That should be simple.
How does one catch central bank activity as a retailer?
You can read Kotak Mutual Fund's monthly market outlook. We publish that data.
Correct. Um, are there any risks? Like in diamond, we have seen lab grown diamonds coming in. Can any scientific advancement like that come in gold?
So, undoubtedly, there is potential of manufactured gold. In CERN, Switzerland, they have converted lead into gold, but the costs were prohibitive. Gold was temporary. It was 4 nanoseconds in nanograms. So that technology is unlikely to materialize in the medium term. The second one is more real, nuclear fusion. One startup in California converted mercury to gold. If you remember our Sastra, we talked about Paras money, which can convert a metal into gold. The chemical compounds between mercury and gold are quite close. Now, can there be a technology which can convert mercury to gold, as this startup has claimed through nuclear fusion? We'll have to watch and observe. There are people who are now claiming that by 2030, 2035, nuclear fusion will become commercially viable. It will eliminate cost of power. Everything will be available for zero. Like air and water, power will be available for free. So keep a watch on nuclear fusion. If it becomes successful, then short gold, that will work out.
So gold story is quite clear. Central banks buying. We in India, we anyway households buy as well. For silver, silver is not just a precious metal used in jewelry. Uh, do you want to touch upon what are central banks doing it with it? And it's also an industrial metal. So its demand and supply in industries or semiconductor space also kind of drives prices. Um, what's your take on silver?
So at this point of time, we are not very sure about silver. There are multiple conflicting views we are hearing. New silver mines have opened up, increasing supply in Peru, Mexico, Argentina. Recycling of silver has picked up the pace. Demand for silver is down about 19% as people are finding alternate metals. Overall, not very sure about silver. And it's a tricky metal. How many of you have heard about Hunt family? They were one of the richest American family in the 70s and 80s, probably third richest. तो और ज़्यादा पैसेदार बनना था. Did all kinds of research and find out that if they corner silver, silver prices will shot up. So they started cornering silver, pledged silver to borrow more money, bought more silver, prices went up, took more loans on margin. Silver shot up roughly about from $3 to $30 types. But then suddenly supply started coming in. It was coming in from Middle East. They checked everything. There was no mine in Middle East, but silver aa raha tha. There was more supply. Prices started coming down. Margin calls started coming. Silver came back to $3. In the process, Hunt brothers became bankrupt almost, lost a lot of money. Who provided that silver? Indians. हमने यहाँ से चांदी मेल्ट कर करके मिडिल ईस्ट भेज दिया and brought down Hunt brothers. So silver as a metal is dependent upon demand and supply. At a price, I have no doubt that Indians will again melt silver and send it back. So silver, be careful. We are not very sure where silver is moving at this point of time.
The last thing that I want to touch upon is, I think, very close to everyone's heart over here. Dollar INR keeps depreciating every now and then. It makes daily headlines. Um, as an investor, if you want to uh, protect your earnings in dollarized terms, you see dollar INR going down, and you see muted returns in equities over the last 1 or 2 years. Obviously, it's followed on like uh, very good returns in 2022, 2024. How does an Indian investor protect their dollarized returns?
So destiny of rupee is to depreciate. Our inflation and our productivity is adverse to our trade partners. To remain competitive, we have no option but to let rupee go down. Can it change? Never say never in the market, but not in the foreseeable future. Now, how do I protect my portfolio? You can all take advantage of LRS or some of the mutual fund schemes which are open to carry money out. There are global emerging market fund which are probably better positioned today. For last almost 15 years, US outperformed emerging market. Last 1 year, emerging market started outperforming US. And since dawn को समझना मुश्किल ही नहीं नामुमकिन भी है, my my bet is that emerging market will continue to outperform US. So you can invest in global emerging market fund where some limits are open that will allow you to get dollar exposure. You can buy gold that will also give you dollar exposure. You can take advantage of LRS. There are broking sites like Interactive Brokers which will allow you to buy any stock, any fund in most parts of the world, and they are reasonably good in price discovery. So these are all the options which are available.
Uh, what do you think about RBI's stance over here? So RBI, in one way, they say we want to internationalize the rupee. They have been vocal about it. They want rupee lending in Bhutan, Nepal, countries like these. Um, are even their currencies are pegged to ours. Um, then there is a speculative market in dollar INR offshore curves where banks will speculate, and RBI has been intervening in that market, changing regulation most recently. Uh, can they intervene too much to protect dollar INR?
So globally, we have seen that whenever central banks have tried to play against the fundamentals, by and large, they have failed. Bank of England failed miserably against George Soros and broke the back of pound. Bank Negara Malaysia also failed miserably in 97 global crisis. So you can influence market for a while, but finally fundamentals prevail. And I think RBI is too smart to not recognize that. They have been following a fantastic policy. Let market determine the value of currency. We will intervene to manage the volatility. Markets are markets. You can influence them, but you can't control them. RBI is managing volatility, not the value of currency. And of course, there are days when they are down and there are days when they are up. Right now, they have been cornered. They are short in forwards market between 60 to $100 billion. More importantly, they have transparently disclosed this key I am short. The cardinal rule of shorting is you never disclose your position. But हमारी RBI संत है तो सच बता देती है. On top of it, higher oil prices are hurting right now our economy, and which is where for RBI right now it's a tough spot. But they still have $700 billion of reserve. economy is doing well, and there are multiple tools available at the disposal of RBI to manage the transition. FCNRB 2008 kind of deposit, MTN note issuances by the Indian banking system like before, liberalized ECB guideline, inclusion in Barclays Bloomberg bond indices, opening up of FDI regulations. So there are multiple options available with RBI, and I'm sure they will manage it well.
Looks like volatility is going to continue in FX, in equities, rates as well. But there's a lot of value to be found, at least at home in India. Um, where would you, like, if you were to summarize, how would you allocate your portfolio to find value in the next 1 year, 5 year, and maybe longer term, 10 year or so?
So again, value is function of your expectation. If you're expecting 30% return in next 1 year, I doubt there is any asset class on horizon which will meet your requirement. If you're happy with 10-12% return, there are many options available. My hack to an average investor: please pick up 3 asset allocation fund: Kotak, ICICI, HDFC, SBI, Nippon, whichever you feel appropriate, but Kotak rakhna, and see where we are allocating. At this point of time, our allocation is neutral equity, bit biased towards large and mid cap, little underweight small cap, sectorally banking, hospital, consumer discretionary, cement. We are bullish gold, kind of neutral silver, and on fixed income, we are more on carry than on duration. Between debt, equity, and gold, silver, you roughly get the view of India's finest fund managers. Of course, we go wrong, but we don't go wrong by a margin that will lose our job. Abhi tak to chal rahi hai. So, do the asset allocation looking at 3 or 4 fund houses asset allocation. By and large, you will be right.
Thank you. Thank you so much for taking the time. Do we have time for Q&A? Maybe we can do two questions in the audience. Yeah.
for want of a better word, who said, look, this is not India shining. Cost of compliance is high. You have a chance of going to jail. Tax returns, taxability is a big issue. So why should I put my money into India? We have a weak dollar. But my personal view, and you referred to the opportunity in India, the Triveni Sangam that you referred to. In spite of all that, I think, and from a foreign investor's perspective, of course, ye dil mange more. But as you said, abhi to picture baki hai India mein. So there is an opportunity. Demographics is to our advantage. We have a lot of 7.6% GDP, 2% inflation. So if I have to flip Nilesh bhai and say, if you are a foreign investor, and knowing that FIs have been selling, would you still place your bet on India in the given circumstances for the next 5 to 10 years? Of course, Mark Mobius just passed away. He's been India bullish. But if I have to say, if you have to carry on Mark Mobius's legacy, what would your bet be on India? Thank you.
So, one, market is made up of opposite views. That's why there is a seller and buyer. अगर सारे FPIs bullish होते तो माल कौन देगा? Second, as an investor, we are here to make money. As a citizen of India, of course, I have obligation to India, but as an investor, I want to make money. And wherever opportunities are, we should be going to capture that. They are global investors, they have more familiarity with other markets, and they can go and capture opportunities there. My strength is in India. I'll capture opportunities here, and I'll continue to keep a watch for global opportunities also. There are businesses which are not present in India, which is available only offshore. There are business models which are not available in India, that's available only offshore. In deep tech R&D, we are behind. There's no shame in accepting that we are behind. But you need balance in your portfolio. India and the world both will coexist.
I think we can wrap.
We can do
So,
one more question.
any
Are there
any
any
more
more
questions?
questions?
Thank you so
Thank
much.
you so much. So, yeah, we'll give for you.